Welcome, dear traders. US stock indexes closed Wednesday with a sharp rise, climbing closer to intraday highs. After the recovery, futures for US stocks were trading almost unchanged in the Asian session. The Japanese and the Australian stock exchanges picked up steam following a bullish correction on Wall Street. Which sentiment is prevalent today? How does it impact currency moves? Watch our video review and find out. Let's start. Judging by yesterday's rise on Wall Street, the uncertainty that previously triggered a major sell-off has somewhat receded. What was the reason? After all, the risks of a recession and the expectations of a sharp rate hikes which weighed on the stocks have not disappeared. Besides, the future economic prospects are foggy due to galloping inflation. The Beige Book, which was released yesterday, also did not contain anything new. An overall summary of the 12 district bank reports revealed that economic conditions remained almost unchanged. The Beige Book is published 8 times a year and usually 2 weeks before the FOMC meeting. So the countdown has begun, and perhaps this factor improved market sentiment. The comments of Fed policymakers also had an impact on the markets. Boston Fed President Susan Collins voiced again that the main priority is to push inflation to the 2% target. And Richmond Fed President Barkin said more rate increases are needed. Fed Vice Chair Lael Brainard noted that the regulator would maintain tight monetary policy for as long as it takes to get inflation down. However, investors perceived her remarks as a warning against too high rates. So for traders, it was a signal of a possible slowdown in the monetary tightening. Cleveland Fed President Loretta Mister believes that inflation has not perked yet and the risks of a recession are mounting. After the release of the Beige Book and the comments of Fed members, investors breathed a sigh of relief. Optimism returned to the stock markets, and the US dollar halted growth and moved into a sideways channel. Today, it's still trading close to Wednesday's high of 110.79, and the US dollar index is hovering today at 109.75 versus its main rivals. Before the blackout period begins prior to the FOMC meeting on September 2021, Jerome Powell is going to deliver a speech today. He is unlikely to change his rhetoric on aggressive tightening. This is why the US dollar may receive support amid his speech, and it may escape the intraday sideways channel of 109.49 and 109.88, shifting to the upward one in the American session. The pressure on its rivals has also eased today, so the yen made an attempt to regain momentum. The dollar-yen pair dropped to 143.53. Another driver was a decline in the US government bond yields, and after that, trading was rather volatile. However, in the Asian session, the greenback remained stronger against the yen, and the pair was moving in the range of 143.42 and 144.55, decreasing to 144.06. The pair went up a bit later amid the widening yield gap against the backdrop of a moderate rebound in stock markets and expectations of sharp rate hikes. Over the past 2 seasons, the yen has fallen by more than 3%, reaching a low of 145. Such a steep drop in the national currency made the central bank once again extremely concerned. Chief Cabinet Secretary Hirokazu Matsuno said that the government is ready to intervene if rapid one-sided moves in the currency market continue. However, Japan's GDP climbed in the second quarter. The profits of export-oriented Japanese companies are also growing steadily amid the weaker yen, so the government will hardly take any action save for verbal interventions. The Aussie showed a similar dynamic to the yen. The sentiment of the Australian market was largely influenced by China's trade data for August and coronavirus news. China imposed more restrictions. On Tuesday, Beijing reported the highest number of daily COVID cases since mid-June. However, the main catalyst was the speech of the Reserve Bank of Australia governor, who talked about the slower pace of rate hikes in the future. In just 5 months, the regulator raised the cash rate by 225 basis points. All else equal, the case for a slower pace of increase in interest rates becomes stronger as the level of the cash rate rises, Philip Lowe said. Following these comments, the Aussie slid into intraday downward corridor of 0.6714 and 0.6777. It's extending losses given the upcoming Fed meeting and a rate increase. It's trading at 0.6733 today, and the New Zealand dollar is also facing bearish pressure. It decreased to new yearly lows, trading at 0.6043. It was moving the range between the support level of 0.6036 and resistance level of 0.6087. And this week the price slipped to the level of 0.5997, unseen since May 2020. According to FX strategists, it's rather difficult for currencies to rebound due to steady rally of the US dollar. Although the Reserve Bank of New Zealand is prone to hike the interest rate, the dominance of the US dollar over the Kiwi will continue, boosting inflationary pressure in the country. And that's all for now. We wish you a productive day. Feel free to leave your comments down below. Subscribe to our channel and stay up to date with the latest market news. See you!